Hello and welcome back to the Property Pilot. Today I'm going to break down the costs of a buy-to-let property. So welcome back. Today we're talking about costs, and I'm going to break down the costs to buy-to-let property. And I'm going to break down this video into three main parts. So first of all, we're going to be talking about the cost to actually acquire this property in the first instance. Then we're going to come on number two, onto the cost of managing this property, the ongoing costs revolving around buy-to-let property. And then finally, thirdly, I'm going to talk about the costs to exit a buy-to-let property, so if for a sale or if we're refinancing. So let's talk about the first thing. The first thing is, we need to actually buy this property. What are the costs involved to buy a buy-to-let property?
Okay, well, we need to account for a deposit. So the deposit is typically 25% on buy-to-let properties. So, where are these funds coming from? What are the source of the funds for these deposits? Is it from your job? Is it savings? Is it inheritance? Is it from family? Is it from investors? Where is this money coming from? Really important question. Now, there are some buy-to-let lenders that are, don't like money coming from investors or third parties, people that aren't your family essentially. And maybe you'll need to bridge this or acquire it in a different means to actually purchase this property. So really, if it's from your savings, if it's from your work, if it's from inheritance or family, that kind of stuff, most buy-to-let lenders are happy to lend on that. Let's get back to the office.
Okay, the next cost is stamp duty. So this is a really important cost that we've got to factor in when doing the figures for our potential buy-to-let property. Now, if you're buying a buy-to-let property, you'll be classified as, buying an additional property like investors are, and at the moment you pay a 3% surcharge for buying an additional property, okay? So again, just type into Google stamp duty calculator. You can type in all the figures and it will chuck out what stamp duty you have to pay on that particular property. Of course, it depends on the property price, okay? So make sure you account for stamp duty in your figures. Now, before I move on from stamp duty, there are various ways to actually reduce your stamp duty liability, and I'm going to be talking about this in another video. However, for the purpose of this video, we're just talking about the normal introductory cost of buy-to-let properties. Now, if you are actually getting a mortgage or getting finance on a buy-to-let property, then actually some of the ways you can reduce your stamp duty liability aren't actually applicable, because you wouldn't really be able to get a mortgage in the first instance, or a standard mortgage in the first instance. Okay, so the next cost are legal fees. So of course you're going to have to pay a solicitor or a conveyancer to undergo the necessary legal work to acquire this property, okay? And this can range wildly depending on which legal firm you instruct. So I always recommend actually instructing a proper legal firm with a really good reputation, because what's really important here, don't see this as a cost. This really isn't a cost. This is an investment, because if you're using a proper solicitor who is actually doing everything they can to de-risk this investment for you and bring to light any possible issues that may arise 10, 20, 30 years down the line of owning this property, that's what you want. What you don't want is one of these online factories that churn out cases, thousands of cases a day. They don't look at the paperwork, they don't really care, they operate on a low fee model. So you really want a solicitor that adds value and is going to help de-risk this potential investment for you. And this can cost anywhere from, say, £1,000 to £2,000 depending on the level of detail. So you'll need searches to be carried out and other things of that nature. Again, it depends on the property. If this is a standard 1 or 2 bed property or 3 bed property, something like that, account for about maybe 1,500 in total in legal fees and searches and things of that nature. Now, if you're buying a slightly bigger property, maybe it's a block of flats or something a bit more complex, again, these legal fees will cost slightly more. Okay, moving on from the legal fees, broker fees. So your mortgage broker fees. You're going to have to pay, or you should really be paying your broker a fee for the work that he or she is doing. Now, there are some brokers out there that don't operate on a fee model, and that's okay. But in my experience, I'd much rather pay a broker a fee to do some really good work and prioritize my applications. Even though I put loads of applications through my broker, I think it's really important that they're compensated fairly for the work and the value that they deliver. And this could be anything from a couple of £100 to £500 per property. And again, we're assuming it's a standard property acquisition, not a block of flats or or something like that. Okay, next fee you need to think about, this is an optional fee really, are the survey fees, okay? So, you may want to get a survey done on the property or even a home buyer's report done on the property if you're not too confident on the condition and the cost it's actually going to take to turn it around, okay? So, this can range anywhere from, a couple of £100 to £1,000 depending on the scope of the property. Again, your lender, if you're getting finance on the property, which most buy-to-let investors do, your lender may require a survey or evaluation. Again, sometimes you've got to pay for this, sometimes it's actually free of charge, and then again, this can range anywhere from nothing to free to, £500, something like that. So, surveys and home buyer reports are sometimes optional, things you may want to consider, and, don't forget to account for these when you're actually calculating the total cost to purchase this buy-to-let investment. Okay, so we finished all the initial fees that you have to pay to acquire the property. There'll probably be a couple of other small little things, but these are the main things. Now let's move on to number 2, really important part of today's video, the ongoing fees. So we're assuming we've already successfully completed on the purchase of this property. What are the ongoing fees? What fees do we need to think about whilst we hold and retain and manage this property? So obviously the biggest fee is going to be your mortgage, okay? So this is the biggest cost that you're going to have to think about. If you have got a mortgage on this buy-to-let property, then you're paying a monthly cost to the bank or to the lender, whoever it is, and that's the mortgage cost, okay? This can range anywhere from £100 to thousands of pounds depending on the price of the property. So that's really important fee to think about. Okay, moving on, insurance. We've got to insure the property. If it's a freehold property, we're legally insured to insure it, and this is generally, very typically, around 2% of the annual rent. So that's a nice way of working out insurance. And again, if it's a leasehold property you've purchased, your managing agent, your block agent, will actually sort all this out for you, okay? So don't forget to factor in insurance. And again, if you're buying maybe a property that's vacant, or I'm trying to think maybe a development property, your insurance will tend to be a little bit higher to reflect the increased risk there. So again, that's something just to be conscious of. Okay, coming on to voids. Voids are really important, okay? And we've got different types of voids. So obviously we've got voids between tenancies. So let's just say we've purchased this property, it's vacant. Well, there's going to be a void between, purchasing the property vacant and actually letting it out and getting a tenant moving in there, right? So again, we've got to account for voids. There are also going to be voids in terms of, let's just say you've got a tenant in there and they're moving out, 2 years down the line. Again, there could be some void periods there until your new tenant moves in, okay? Now, again, with voids, there are other things we've got to think about, not just the loss of rent. It only could be a few days or a few weeks, but we've also got to think about the other bills that we, as the landlord, as the owner of this property, are liable for during that period. So, utilities, we're liable for the gas, we're liable for the electric and the water during that period, okay? May not be much, but we still have to pay for it. And if that standing charge, that daily standing charge, is a high one, again, that's something we've got to think about. Also, council tax. There are some councils that no longer will give you a 30-day period where they don't charge you. A lot of the councils have stopped doing this. So even if that property has been vacant for 2 or 3 days, they're going to charge you that 2 or 3 days council tax. So again, these are things you need to think about. These are things you need to factor into your ongoing figures, okay? Another cost that we may want to think about after acquiring the property is, do we actually need to refurb the property? Do we need to spend any money on it to get it to the standard that we want to get to, okay? And not only, is it going to cost us to do this, but also what's the contingency, right? Again, if you're a new landlord, a new investor, maybe you're not too confident on your figures and maybe you want to increase that contingency. I normally have a 10% contingency, but even if I'm not too sure on the figures and I've been doing this a while, I'll increase that to 15 or 20% depending on where the uncertainty and where the risk lies, okay? So again, make sure you're factoring in a refurb if there is one, and make sure you're putting in a really safe contingency. You'd rather be pleasantly surprised with your figures than be below your expectations, right? Okay, let's come on to some really important ongoing fees now that we haven't mentioned so far. And this comes down to time and also expertise. Do you want to manage the property yourself, or in fact, do you not have the time and the expertise and you're going to give it to a managing agent to manage? Of course, this is going to cost something, right? So there are 2 ways of doing this. So if you're giving it to an agent, there's 2 ways that you can do this. You can do this on a let-only basis. So this is where you're only paying the agent to find you a tenant, and you're going to manage that tenant and you're going to manage the property once that tenant is in place, okay? The other way to do it is where you're actually giving it the agent in its entirety. They're going to find the tenant and they're going to manage the property going forward. And there's 2 different pricing models for these services. So generally speaking, for a let-only service where the agent is just finding you a tenant, you're looking at about 1 month's rent. That's the fee you have to pay to the agent. Whereas if the agent is managing that property for you on an ongoing basis and doing everything for you, you're looking at between 10 and 12% plus plus VAT of the rents, okay? So it's important that you factor in those figures, and especially if you're getting an agent to manage your property at 12% plus VAT, some are even higher, it's really important that you factor in this, because that's a large chunk of your funds that are going somewhere else, and it's really important that you're still making a good profit, a profit that's good enough for you and satisfies your requirements and your criteria after you're paying your agent fees, okay? Really, really important. Now, just my little quick tip on agent fees here, don't be afraid to pay 12% plus VAT. It may seem expensive, but actually, if you've got a really good agent and they're delivering serious value, 12% plus VAT is actually a really good deal if they're giving you really good value. That being said, there are some agents out there that are absolutely terrible, so do your own research, have a look at their reviews, and make sure they've got satisfied landlords that are happy with their service. And even better, if you can be introduced by word of mouth from other landlords that are happy with that agent, that's absolutely great. Okay, the last cost, there will be more of a smaller ones, but the last main cost we need to really think about, the ongoing cost, is maintenance. We haven't even spoken about maintenance yet. So, things go wrong in property, they just do. Boilers break, there's going to be leaks, there'll be some decorating here and there, things go wrong. But not just that, there's proactive maintenance, the things that we must do legally on a specific time period. So, for example, every year, if your property has gas, we must do the annual gas safety certificate and check those appliances. Also every 5 years, we must do an electrician report, an EICR, to make sure all the electrics are safe. Okay, so these things that we need to account for and we need to factor into our cost, to our ongoing cost. Now, a little tip, this is what I do. All my properties bar one I manage myself and my team does. Now, I allocate 10% of my rent to maintenance and contingencies, and also that includes insurance. So I know that, say for example, if I'm renting a property for £700, I'm going to keep £70 per month in a contingency to cover all those kind of things. And generally speaking, that's about right for kind of a standard freehold property. Okay, I find myself 10% works. Again, it could be higher, it could be lower for you. It all depends on the nature of the property. For my block of flats, for example, which I own the freehold to, it costs a little bit more than 10%. I budget about 14% because obviously that includes the communal areas and things of that nature, and it's a more complex property. Okay, so you'll be glad to know that we finished the ongoing cost, the middle part, the second part in the buy-to-let cost breakdown. And it may sound like there are lots of costs, and they are, but don't be afraid by this. They're very easy to forecast. Again, you may come across unexpected costs, which we'll cover quite soon, but don't be afraid by this. As long as you've accurately budgeted and forecasted for these, you can actually forecast for things to go wrong and still make some very, very good money in buy-to-let property. So let's get on to the costs once we exit this buy-to-let property. So once we've either selling this property on or maybe we're refinancing it. So first of all, let's use the sale option. Let's assume for whatever reason we're selling this buy-to-let property. Maybe it's been 5 years and capital values in those areas have been doing really well over this past 5 years, and we're looking to cash out at a good time in the market. So what fees do we have to pay to exit via sale? Well, first of all, we've got our estate agent fees. These can be anywhere from 1 to 2% of the sale price of the property. Okay, so that's important that you factor in those. Okay, next we've got the legal fees to sell this property. Now, the nice thing about this is when you're selling a property, it generally costs slightly less than buying a property, because you're not doing the searches and you're not doing that level of conveyancing. It takes a bit quicker and it doesn't cost you that much more in additional fees. So you could be looking at around £1,000, something like that, to sell a property. And the other thing that a lot of people do not account for when selling a property are the void periods. So really important question: are you selling this buy-to-let property tenanted, in which case there's probably going to be no or very minimal void periods, or are you selling it with vacant possession, which means you're selling it absolutely empty and there's no tenant in there? Now, if you are selling it with vacant possession, of course, during that time that the property is in your ownership prior to the sale being completed, you're liable for everything. So you're liable for the loss of, you're losing rent first of all, but also for the energy, so the gas, the electric, the water, the council tax, etc, 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 and also your insurance may go up because the property is vacant. Okay, so you've got to account for these voids, and let's just say your property takes 5 months to sell, which is the average time it takes to sell a property in the UK. That could easily be £1,000 in costs, in council tax and utilities, and not even including loss of rent over those time periods. So it's really important you factor into these figures. Now, why do people do this? Why do landlords sell properties with vacant possession and not tenanted? Because obviously if they sell it tenanted, they're kind of getting more money in the short term. The reason why they do this, and the reason why I also consider doing this, is because if you're selling a property with vacant possession, it appeals to two separate types of markets. So it appeals to other investors that want to continue using this property as a buy-to-let property, which is great, but it also attracts the owner-occupiers, the people who want to live in the property themselves for their own property and maybe want to raise a family in it. Okay, whereas if you're just selling a property tenanted, it really only appeals to landlords and to investors and not to owner-occupiers that want to live in the property themselves, okay? So that's why you may be able to appeal to more people, achieve a slightly higher price on the sale of your property, and actually sell it quicker than what you would do if you were selling a tenanted investment. And even though you're making a loss, you're losing money, you've got loss of rent, you've got to cover all the voids, it's still sometimes better off selling it with vacant possession. I hope that makes sense. A little quick tip there. Okay, so we've exhausted exiting via sale. Let's move on to refinancing. Let's say we're exiting this property via refinance. I mean, it's not really a proper exit because we're still owning the property and we're still managing it, and we're still retaining this property going forward, and we're still letting it out. But if we're actually refinancing a property, what are the costs to refinance? Okay, there are costs involved, and it's really important we're budgeting for these costs. Okay, so first of all, there may be mortgage fees to pay. So you may have to pay an administration fee to take out this new mortgage, and this is it's got lots of different names. This kind of fee, it could be an agreement fee, an admin fee, a startup fee, whatever it's actually called. But a fee to take out this mortgage, a product fee. Again, this could be anywhere from a couple of £100 to thousands of pounds. And as I record this video in December 2022, the mortgage market has changed quite a lot. Now, what lenders are doing now is they've reduced their rates, which sound better, but they're bumping up their admin fees and their product fees to 2, 3, 4%, whereas previously they were kind of around the 1% fee. So all of a sudden you were paying maybe £1,000 for a fee, and that fee is coming to £2,000 or £3,000. Okay, so it's really important you factor in this. Again, sometimes you can add this to the loan, add this to the mortgage, so it doesn't seem like you're paying this upfront all at once, which is great, but some lenders will not let you do that, and they will insist that you pay up front. Okay, so that will be deducted from the balance of the new mortgage. Okay, what other fees do we have to pay if we're refinancing? Well, if we're refinancing early for whatever reason, then we may have to pay an early redemption fee. Okay, really, really important. This is where we have to pay our existing lender a fee to exit that mortgage, and that can be 1, 2, 3, 4, 5% of the loan that we took out in the first instance. So really important that you factor in this, because all these little fees combined can really chip away at the cash that you're going to take out this deal when you refinance this property. We haven't stopped there. So we've also got a broker fee. We're going to probably have to pay our broker maybe between £200 to £500 to make this refinance happen. Again, some brokers don't charge a fee, but that's just how some brokers operate. And lastly, legal fees. Some lenders will require that you pay for their legal fees to refinance the property. And this is typically done on more complex properties with more niche and specialist lenders. So for example, if you're refinancing a block of flats, which like I have done recently, they will demand that you pay for their legal fees, which may not be cheap. So these are the costs that we need to think about when we're refinancing a property. So I hope you've really got value from this video. We've spoken about 3 things really. We've spoken about the costs, and I've broken down the cost to actually buy a buy-to-let property. We've then moved on to the cost to own and the ongoing costs to maintain this buy-to-let property, and we finished up by talking about the exit cost, the cost to actually sell this buy-to-let property and the cost to refinance this buy-to-let property. Before I leave you, I've actually got a bonus tip. So we've spoken about costs in a lot of detail here, but one thing you need to think about is time. What is your hourly rate? Have you ever worked that out before? What is your hourly rate you're earning in your property business, or in your other business maybe, for example? And it's really important. Some people actually judge their success on their hourly rate, not on how much money they're actually making in total. And this is something that I came across maybe about 4 or 5 years ago, and I've had huge success once I've kind of transitioned from my total income to hourly rate. And this is why people give properties to agents to manage. They don't manage it themselves, because if they're managing it themselves and spending more time in their portfolio, and why manage it yourself when you can give it to an agent for say 12% plus VAT, which doesn't actually work out that much if you're looking at it on an hourly basis. And that means we've got more time as investors to actually find deals and make serious large chunks of cash, rather than working over here maintaining the property at what works out to maybe somewhere about £15 to £20 per hour. Okay, so really think about time. It's really important here. We want to maximize our hourly rate if that's something that you want to do, and this can actually be really, really huge. You could be making £300-400 per hour in property just by actually working smarter and not harder. So consider doing everything you can to minimize the time that you're spending in property. Just focus on the big ticket items. Focus on making those big deals happen, and everything else that's classified as admin or can be outsourced for a relatively low cost, consider outsourcing it. I hope this helps. So I really hope you got value from today's video, and if you haven't already subscribed to the channel, YouTube tells me the majority of these people watching this video are not subscribed. Please do consider subscribing. It does mean a lot to me personally, and for those of you that know, I'm running a competition. Once we hit 10,000 subscribers, one of you will be chosen at random, and you'll be joining me in the cockpit. We'll be flying over the Yorkshire together and sharing a really good experience. So please help me grow this channel, and I'll help you by taking you up in a light aircraft, a light high performance sport aircraft, and we can go on a great flight over Yorkshire. So thanks very much for watching today's video. I hope it's been very useful to you and it's helped you budget your figures a bit more accurately when it comes to buy-to-let acquisitions. Enjoy your day.